Welcome back. George is in Laval, Quebec, and he has a question for us. Go ahead, George.
Hi. Back in the autumn of 2014, there was a rumor that interest rates would start to go up, and REITs got killed by about 15%. What do you think is going to happen now?
Okay. So clearly there has been a real focus on things that pay predictable income. And I think that there is always a concern for any income investment that rates could go higher. Having said that, if you look at the history of REITs, when you had periods of months where rates went higher, they tend to do better than other sort of bond proxies. And the reason for that is that you could see, rising rents and rising distributions. Now, the Canadian REITs are a little bit less economically sensitive than U.S. REITs that tend to be more like development companies. So if you had to make a choice, I would probably prefer to focus on U.S. REITs right now versus Canadian REITs. And one of the reasons is that the REITs are about to become their own sector in the U.S. market, their own GIC sector, and they are under-owned by U.S. investors. So I think you have an additional tailwind coming from that, not to mention the fact that the U.S. REITs are levered to the U.S. economy as opposed to the Canadian economy. So if you're concerned about rising rates, I'd be more likely to focus on the U.S. REITs, and there's a lot of them behaving extremely well, including some ETFs like ICF, which is the Coleman Steers REIT Index, or RWR, which is residential REITs. There's a number of very well-performing ETFs.
Okay, Mike in Calgary has a question. Go ahead, Mike, you're on the line.
Hello. Thanks for taking my call. I was wondering if you can share your view about Amazon stock for the next 3 to 6 months, and if it's a good buy at the current price of 740-ish or so. Also, I'm not sure if I understand why the PE ratio is like around 300 or so. Thank you very much.
And do you think you could explain that?
Great question. So, Mike, from the very beginning, Amazon said, if we build it, they will come. So they've been big spenders along the way to build out their capacity, basically to become the 800-pound gorilla that they are today. So in the world of retail, it is an unstoppable juggernaut that purchase dollars are going online, and that rate of growth isn't slowing anytime soon. And Amazon is the undisputed leader in this area. But then you get to bolt on the second theme, which is cloud computing, and they are the 800-pound gorilla in cloud computing. So you have two very significant themes, both of which have tails that will go on for a very long time. Now, at some point, Amazon could choose to pull back their investment and become more profitable, cash flow generating venture. It's probably not immediate, but I think that people are paying for that dominant position in two almost unstoppable themes. Amazon's been a favorite of ours for a long time and continues to be. Well, we have a good-sized holding, and I would continue to buy it at these prices. The other thing that you could do is you could use the ETF, which is FDN, which is Internet Retail, which includes a big slug of Amazon, amongst others who are also the significant players in this space.
Okay, and finally, let's get to a tweet here at K Carver. Can you ask David what his secret is to looking so good? That's a compliment.
Oh, you know what it is? It's a bull market.
Is it?
It is a bull market. I have to tell you, Amber, I'm as a strategist and as a tactician, I've been doing this now 30 years, and I am more bullish today than I have been in 15 years.
15 years.
15 years. We have moved into a very different type of market than we've been in over the last number of years, and it will take people a long time to believe it, but at your peril, I think. I think that we are into a different kind of market, and equities will be accumulated over the next number of years.
There it is, the most bullish in 15 years. We'll take 15 years off your face, apparently. All right, now it is time for the Market Call Mega Minute. Nice viewers. We've got John in Victoria asking about NVIDIA Corp, huge high flyer on the S&P.
Yeah, this is our number one holding in semiconductors. Semiconductors is one of the leading groups in the market, which is always bullish because semis lead the market typically.
Okay, and sticking with that theme, Jack in Manitoba wants to know about Micron Technology.
So Micron Technologies, one of the weaker performing semiconductors. We'll talk about another one in our top picks that I would prefer to Micron.
Okay, so stay tuned for that. We've got Peter in Mooresburg, Ontario, who wants to know about American Tower.
So American Tower firmly in the REIT camp. It's a high growth company, and we didn't own it for a while. We own it again in our portfolios, and I think it looks quite attractive.
Let's take a look at Shopify. Bill in Waterford wants to know if it's a good candidate for capital gains.
So if you believe that online retail continues to grow, Shopify provides the infrastructure for smaller companies. I buy the stock today. It's hitting a new relative strength high versus the market.
Tweet from Kathy on Constellation Brands.
This is in the other camp, the non-cyclicals, back to the Campbell Soup camp.
Yeah.
Constellation Brands and the alcohol companies can do quite well in a world where people are looking for predictability.
Everybody needs a nice glass of wine. Tweet from Art on Facebook.
Oh, Facebook, I think is one of those companies that you, as a growth investor, almost need to own. Such a dominant position. We own a big position.
Do you need to own Microsoft? Pat in Halifax had that question.
So this is going to be an interesting one. Earnings are coming up. We do own the stock. They have been a little bit spotty in their releases, but another big player in cloud and subscription-based software. Both areas strong, and their video game business is not so bad either. So I would lean to a buy on that stock.
Ralph in Regina, picking up on our food theme, wants to know about Kraft Heinz.
Same theme, consumer staples. It's going to behave. You could buy PBJ, which is an ETF of all of these things, and not have to pick one. Absolutely, PBJ.
All right. Tweet from Sam on U.S. Steel.
So the steels have had a good run recently. I hope it's not because Donald Trump has promised everybody their jobs back and to make America great again. If you believe the economy is getting better, you can participate in this group. The aggregate companies also selling into construction are doing well. Construction is doing well in general. So this is why steels are doing well. It's obviously very economically sensitive, higher beta, higher risk. We'll have to see where this theme goes on. You could own it, but keep a tight stop.
PBJ, that's going to be my big takeaway from this show. And that and the secret of youth is a belief in a bull market. That is the Market Call Minute. When we come back, a look at David's top picks.